Ladies and gentlemen, what is going on in the real estate market? You're going to find out next, because we have a Hall of Fame show lined up for you today with none other than the quintessential Chief Collaboration and Chief Financial Officer of eXp Realty. Coming up right now, Jeff Whiteside on Cliff's Notes.
Real estate agents, are you struggling with the day-to-day grind, dialing for dollars, putting in hours of floor time with little to show for it? Are you looking for tips, tricks, and tactics to accelerate your career as an agent that will have you closing more homes, working with more clients, and earning more money than ever before? Hi, my name's Cliff Freeman, and I've spent the past 2 decades of my real estate career running one of the top brokerages in DFW and personally coaching over 1,000 high-performing real estate professionals across North America. I created this podcast to share the strategies and tactics you need to explode your real estate business. I guarantee it.
We guarantee it today, because we're bringing the fire. I mean, this is no holds barred. We're going to get down. We're going to peel the onion back and get right down to the middle today.
Yes, sir.
This is we have a dumpster fire going on in some parts of the real estate market, and we have the expert, the man himself. Let's bring him in all the way from New York, Mr. Jeff Whiteside. Jeff, how are you, sir?
How are you? Great to join you. And my agent, Michael Valdez, was trying to get me on the show for a while, so I appreciate you guys having me.
Well, we're super stoked. I know it's taken a while for us to get schedules together, and we're grateful to have you here. And you know what? The timing of having you on the show is absolutely perfect, isn't it? I mean, this is great. We got so much to talk about today. There's all kinds of turmoil and volatility and the stock market and the financial markets, and also in our industry. I mean, we're seeing things that we haven't seen in some time. And first of all, I just want to say that if you're out there and you're not a real estate agent, but you're a consumer and you're watching, look, there's no need to get too concerned about this. I mean, we all have to have a house to live in, and things go up and they go down. So, this is not the end of the world by any stretch, but it does represent some shifts that we're going to see in the market. And we've already started to see those begin. Certainly, we know very well locally in our market, we're starting to see house prices, that change velocity with which they were going up has gone to zero. We saw an inflection point there, C3. Yep. And days on market is going up. We're starting to see more inventory. And you and I were talking, Jeff, before the show, an interesting statistic that we just found out, and that was, according to NAR, about 40%, closer to 50% in Tarrant County of all the homes that were bought and sold in last year in 2021 were bought by institutions.
And that was in Texas.
Yeah, and I think that applies pretty much to Texas across the board. So what we've seen is Wall Street getting its self back into the real estate market, which never ends pretty. Not in my lifetime have I ever seen it end pretty. But we're seeing a lot of crazy changes, Jeff. First of all, thank you again for being here. What do you see about from your seat? What can you tell us about the market? You have a much better perspective than we do here in Dallas, but what are you seeing on more macro terms?
Yeah, I mean, what we're seeing is we've been out with a lot of analysts over the last three-ish months, and we started back in January. So as you know, Cliff, from in our business, the company's growing phenomenally. Right. So year after year, we've delivered from an agent count standpoint, a revenue standpoint, a growth investment, and, all the way through the first quarter. All right. So we were out quite a bit with analysts in the second quarter of this year. And, there's a lot of people predicting, a real estate bubble in the second half of the year. What we're still seeing growth in our business. And as you're aware, I mean, we still have, from an eXp standpoint, we still have quite a long road to go, both domestically and internationally. All right. So we have a different model. We have a variable cost structure. But what we are seeing, what we're preparing for, is a slowdown in the industry sometime in the third, fourth quarter of this year. So we started to do that in the first quarter of this year. And, we feel pretty confident, though, as a company. All right. I mean, there's a lot of there's a lot of bad news out there right now with the interest rates. We were talking with one of our investors about a week ago. I think we did about 6.5 million houses last year. And that, that's when everything kind of exploded, right? Not too long ago, I joined the company in 2018. And I think in 2020-ish, we're doing, 5.5. And the company is growing incredibly, right? So that was a pretty healthy market. And if you remember back in the day too, you would have a slowdown in the first quarter. You'd have a slowdown in the fourth quarter. And then you'd have a busy season in Q2 and Q3. So, we do believe that there will be a slowdown. We believe that, the prices have gone crazy. Competition has gone crazy. But, I'm still seeing it in many markets that, good houses that are going on the marketplace. There's still a lot of pent-up demand. And there still hasn't been a lot of supply. I think that's going to shake out a little bit. But, we are anticipating a slowdown. But, we're preparing for it. But at the same time, we're very confident that, our particular company is built for that slowdown or anything else that comes at us.
Yeah. You really nailed it. At 6.5 million, if we had a 20% pullback in sales, that would put us back to sort of the pre-pandemic level, which was pretty normal back then.
Yes.
Right. So we can take the hit.
Right. And that was one of the questions was, so what happens if it goes down 20%? I go, well, it was 5.5 not too long ago. And it was a pretty healthy business for us. So as you know, we are prepared for what's going to happen, and we're actually investing heavily to come out the other side.
Yeah. Well, I think if you're watching the show and you didn't write this down, if you're interested in this, one of the key things that Jeff said is that we're built on a variable cost structure. And Travis, can we pull up that first slide here? I want to talk about this for a minute, Jeff, and this is a representation of revenue declines for just 4 companies in the business. And on the right-hand side, what we're seeing there is the smallest revenue decline in the first quarter. What we're seeing on the left-hand side is the largest. And I guess this is public information. Redfin's on the left. Their structure is salaried. Their employees are salaried, very, very heavy and fixed overhead. And then, you've got, I guess, Compass there in the middle, and then we're over on the right. And the difference that kind of, that really fits that graph is that, the luxury end of the market, number one, is down 18% right now in terms of sales volume. And then we've got different business structures. So we've continued to grow through the first quarter in terms of agent count, which has really helped us avoid that revenue decline in the first quarter.
Well, and just to make sure we're clear too, is that our revenue didn't decline year over year; it declined quarter over quarter.
Yes. Yeah. No.
Yeah, so year over year, the revenue was actually up 73% in the first quarter.
Yes, and thank you. Let's be clear on that. That was the first quarter. That's the seasonal quarter where we tend to see the market softens every year that time of year for sure. But the point is that we really led the pack in terms of continuing to plow through and continue our agent growth during that time period. And in terms of back to that variable cost model, Jeff, this is where I think that we really need to talk about this for a minute, because what does that mean when the market shifts? What about companies that are heavy on fixed costs versus companies that are, more so our model with, more variable costs?
Yeah, and cost it's an important thing to talk about, but I believe I'd rather start and talk about the growth, right? Because the big difference between us and pretty much every other company is we have an organic growth model. All right. And the best example I have is that when I was here in 2018, I was in a room with probably about 20 plus 25 people, which were our big influencers back in the day when we met together in Arizona. Okay. And so, who those people are. I'm fantastic. Gene and company did a fantastic job getting the company going. But that, we had a fairly few number of big influencers. And as we look across our business today, what I talk about quite often, and I really believe it, is that we've kind of hit a network effect in the US. And that's because if you look over a company, including you guys here, and all the events that we go to, there's literally hundreds of people that are growing EXP organically right now. All right. So that's actually that's a big start of your fixed cost, because if we grow and we sell, then that money goes out, right? If we don't grow and we don't sell, the money does, so it offsets each other. But the great news, I think, for EXP is that this organic model that Glenn put together, the part of the model is organic growth. And it's bigger than ever right now. It's absolutely bigger than ever.
Yeah, I mean, we don't pay recruiters. We don't pay people to get on, bang the phones out and recruit.
The model is to pay. Yeah, the model is to pay half of our company dollar to grow the company. Mm-hmm. And I mean, you can take a look. I mean, when I came here, we had 15,000 agents. In 2018, at the end of 2018, we just announced 82,000. Okay, back then we were primarily a U.S. residential real estate company. And now we're in 21 countries. Okay. We're in, and a big part of this too, is that, we've used this virtual platform. Everybody talks about the metaverse. Nobody does it. Glenn started in what they call the metaverse now from a virtual standpoint. And I'm not saying that to be, savvy in terms of technology. I mean, this is how we build our business. So when you think about a variable cost structure, Michael Valdez was able to grow. Jason and I dipped our toe in international with the UK and Australia, and it worked out really well. And they're both doing fantastic. All right. And then we brought on Michael Valdez, who actually expanded the company by about 19 countries without getting on a plane. So when you think about how you grow and how the business has expanded and how we have this competitive cost structure, a lot of it is because we have the organic growth model. And the second piece of it is that we have this virtual platform that we grow our business on. And so that's all part of that equation.
Yeah. And, we sell a lot of real estate here at eXp. I think Compass,
Absolutely.
For independent brokerages, Compass is highest in volume, but we're highest in transaction numbers.
Right.
They just laid off 450 people, or 10% of their workforce. I can do the math. That means they have 45, or they started with 4,500 people. How many people do we have at eXp?
Yes, we got approximately about 2,000 people right now. And, most of those people are focused on the brokerage, all right, supporting our agent growth. And one thing, we were out in the market in the first quarter, and we heard a lot of the conversation about how there could be a slowdown and how it could be a tough second half of the year. So back then we started to, historically what we would do, I just went through some of the growth, the agent count numbers. We'd hire ahead of the curve, right? To get people in place to hire ahead of the growth curve. So we stopped doing that in the first quarter because we were looking at transactions. As you can see, the results in the first quarter, transactions were up 55%, revenue was up 73%. So we're still growing, right? So what we've done as a company, we plan the year before. We look at what we're gonna spend from a cost standpoint, and then we adapt. So we started adapting already in the first quarter, and we're not going to add the type of incremental transactional based resources that we would have normally, right? We're looking heavily at things that we really don't have to spend cash on, but at the same time, we're absolutely dedicated to technology, international growth, commercial, affiliated services. So we're feeling really good that when we come out the other side, if there is another step, there's going to be another side. I mean, we're feeling, I think COVID was a good example, Cliff, to get back to your cost thing, is that we woke up one morning thinking we might not be able to do any transactions. So we put a plan together. We had 3 different pieces of our plan. We put the plan in place right away from a cost standpoint. And I think that the second quarter, third quarter of that year in 2020, that was one of our most profitable quarters. Right. And then we started growing. All right. So then we brought more resources in to support our agents. So that's where we have that variable cost structure. I think that we don't have the brick and mortar. All right. So, I'm sure you heard Glenn tell the story many times, is that has traditionally been the downfall of the real estate brokerage industry, is that you have all this fixed cost, and when the revenue is not coming through, you can't survive, and a lot of people don't, right? And I think that something that was really cool too was that in COVID, we were growing heavily before. We grew through it, and we're growing now and after it. But one thing from an operational standpoint is that when all these offices shut down, we were open 24/7, right? So regardless of what happens in the future, we can adapt. We have this virtual workspace and education and collaboration platform that all the agents can be on. We can grow with, and it's a relatively low cost of doing business.
Well, with that, along that line, Jeff, what does it cost our company to support those 2,000 people with office space?
Well, so I mean, we still invest in VirBELA, all right. So we're investing in the technology because the fact is it doesn't exist anywhere else. This really doesn't exist. People talk about it, but there's really no other company that runs a global $4 billion company plus on this platform or any kind of virtual platform. So we invest roughly. I think we've talked about it before. We invest roughly about 10 million-ish a year on that platform. All right. But if I think I've heard numbers of $200 million plus in office space it would cost us if we had to go, like we're in 21 countries, right? We have we'd have all these offices we'd have to be in. And on top of that, you can, times the number of staff you'd have to have. And, we do as much as we can from a consolidation standpoint, while at the same time, giving focus in the states and the countries.
Right. So some of these larger brokerages, their rental costs could be 5-10% of their costs.
Right.
For us, it's nickels, it's peanuts, and so I can't imagine what it would cost to house 4,500 agents, let alone
from a financial standpoint, it's a fantastic competitive advantage. But as I see it, and even coming from that world, it's just such a better way to do business. All right. We grow so fast. I mean, when we go into another state, we're in all the states, but if we go into another country, we get everybody from that country in with our legal and all the people working together on a day-to-day basis. I've had lucky enough to bring most of the leadership team into the company, and all of them came from similar traditional places like I did. They love it. I mean, they just love it from a productivity standpoint, from an engagement standpoint. It works really well for us. So for me personally, I think it's a lot like e-commerce, right? I see a parallel between virtual work and e-commerce. It just makes so much sense, right? And economic sense that it's just going to happen. And so obviously Glenn was way ahead of it, and we're on it every single day, and you can see the results that have come through it.
Yeah. Let's shift gears here a little bit, and can we talk about balance sheets? That's something really interesting, right? For some people, go, balance sheets, what the heck is that?
You love P&Ls.
Yeah, you know me, I'm that kind of guy.
Yep.
But really, I mean, I'm going to just sort of pre-frame this a little bit and mention that there's some people in our industry that right now have that their balance sheets are a little different than ours. Travis, would you mind popping up the next slide for us here? I just want to throw this up here real quick. And talk about companies that are consuming a lot of cash right now. They got their public currency a little different way than we did, and their model is different. But and this research from Mike Del Prete, this is his work, not ours, but it just shows that if you read the article, that it looks like this company here is going to have to go back and either significantly cut costs or go raise some more money. And so, when you look at balance sheets like that, where they have a burn rate, and then they're constantly going into the capital markets, what's it going to be like going forward for those companies? In fact, there's another competitor that just filed a $200 million shelf offering.
Yep.
Which is their entire market cap right now. If you've got to go back and tap the capital markets in this kind of a financial market, what are the headwinds here?
It would be tough. I mean, we're very fortunate the way the model was built. So we're based, we run our entire business on cash flow. All right. We have zero debt on our balance sheet. We keep about $100 million on our balance sheet in cash. And that's after we pay all our bills. That's after we invest across the business. And, that's after we give most of the commissions and revenue share and things back to the agents from a compensation standpoint. So that's our first deliverable. And then once we get back, when the cash gets back to us, we invest heavily, and we still are running a profitable business. I think we've had 10 quarters of GAAP profitability as of the first quarter of 2022. So, and we get especially prior to the stock market going down so much, we get we had the availability to take debt on the balance sheet. At this point in time, we just don't need it. If we could see an opportunity that would change the game in a big way, bigger than we're doing it now, it's a possibility, but we don't see any need to put the debt on our balance sheet. And then also there's no debt on the balance sheet, number one. And number two, the company still has a controlling interest by the founders. The main person would be Glenn, right? And so not only do we have the best leadership, I think, in the company, in the industry with Glenn and a number of people that we have here, we also have the agility and the decision making to make decisions quickly for our agents and for the to guide us going forward. And I think that's what you've seen so far. And as we go into tough times, if it happens to be tough times, we've gone through it before, we've grown through it before, and we have the agility and the flexibility to do what we need to do to make changes.
Jeff, what's the advantage? Some of our competitors have chosen to remain public, although one that comes to mind, there was a big rumor they were going to do a public offering, and apparently, I don't know what happened, but
Right.
Let's just say it didn't get done. What's the advantage for us to be a public company versus being private?
So the biggest advantage, and so the agents are completely aligned financially with the interests of the company. All right. So, and my best experience, as I describe it, is that I went to eXp Con at 2018 in New Orleans before I started, so I didn't know what to expect. Right. I wasn't from the industry, did a little commercial real estate back in the day, and I get there and it feels like it's a Berkshire Hathaway stockholders meeting. People are owners. They're walking around like they own the place, and they do. And I think that's one of the biggest, the biggest positives and competitive advantage. We were the only one that did that for a time. Now that others have done the same thing, but it's a big deal. And I think it's the alignment of the financial interest between the company and our agents. And you've been in so many of these meetings now with Glenn and myself and the team, and we're looking for the best agent value proposition, and we're going to keep driving that. And so we all win together. And I think being equity owners in the company just takes it to another level. And that's the main reason we do it. And that's the main reason we're going to continue to be a public company, so our agents can be the owners of the company.
I got to tell you, I've been blessed to be at this company for 5 years, and all I can say is God is good. Thank you very much. Thank you, Glenn, for building it. But retention starts day one here at eXp, and it starts with the stock and so forth. I've been blessed to earn a lot of stock, buy a lot of stock. I just want to throw this out because everybody knows that our stock at one point traded as high post split. I think it was up in the 70s or 90s, something way up there, stratospheric. And now it's back down. Let's just face it, the whole sector is down to their 52 weeks. Some go back longer than that to 52-week lows. But the reality is that over the last 5 years, our stock's had a 732% return, if I recall correctly.
It has. When I started in 2018, the valuation of the business was $500 million. Right. So even today, we're at 1.7 billion. Okay. So that's not, nobody's happy with that. But, having said that, to give some comparisons, the stock prices from Compass was 17 down to $3. Zillow's 124 down to $28. Redfin 65 down to $7. Right. So it's almost like when COVID hit, the cruise ships went down. So this is kind of the same reaction. And, you probably been following the market as long as I have. You don't know what's going to happen tomorrow. You don't know what's going to happen next week. I think the only thing that I've learned, based on the ups and downs in the market, especially back in 2007, or, even before that, is that if you buy good companies, eventually when the market comes back, they will come back. All right. If you don't have good companies, they're not going to come back in a market correction. So we feel very strongly, based on what we've actually done and what we're doing, that we are a very solid company. I think that, when you look at the growth in agent count, you look at the growth and, our geographic expansion, what we're going to be doing, you don't even see any results from affiliated services right now. And we're working hard. You just saw we announced Leo to be the president of affiliated services. So it's not just one person, but we're working together to grow the company smartly. And so when we come, we do believe we'll grow through this. We might not grow at the rates that we've grown in the past because maybe, from what I've heard, possibly there could be 200,000-300,000 people leaving the industry. Who I don't know, right? I mean, these are the kind of numbers people are talking about. So obviously that's, if the volume goes down by 20%, but we still have we only have about 72,000 people in U.S. Last time I checked, it was about 1.4 million realtors. So we have a long path for market share. And that's actually to kind of come back a little bit. I mean, our goal has been to, Glenn's goal and all of us behind him is to create the best brokerage where the agent just wants to be here. Right. So, and we've gone after that and, we're building market share. That's been a big deal for us. And as we build this market share and we get these portals around it, we get the services around it, financially, there's a lot of opportunity for the company to do even better than it is right now. But, we're very proud of what we've done so far. We're preparing for, a tough time if that happens. And I think, we're very confident we're going to grow through this.
Well, and again, I mean, it all really goes back to the model, the fact that we don't have the brick and mortar. We're built for speed. And that's the neat thing about it is we can scale, in the legacy franchise business. In order to open up a new market, you had to find somebody that had a check for $750,000 who could build a $2 million market center. Then you had to construct the thing, and you had to get 40 agents in the group before you could even qualify for the franchise. What I think a lot of people don't realize is that there are teams that have come over here with an expansion goal and have been able to get into multiple states in no time at all. In fact, I'm bringing on a friend of ours that I coached for a while. He's in 13 states. And when he saw the model, he knew, because he had so much money tied up in each state in compliance, MLS fees, broker fees, yada, yada, yada. And when he saw and did the math, he knew that he was going to save tons of money and then be able to scale and grow his company even faster. So that's a huge competitive advantage that we have here. And if you're out there listening in the audience and you have a team or a small brokerage and you're looking for, number one, you're looking for growth. And then I also want to talk about this, Jeff, because tied to it is, for the first time, it's an exit strategy. Have you ever been to a realtor's retirement party?
I have not.
I haven't either. I mean, I was talking to a gentleman who wants to leave his current broker, who's 85 years old, bless her heart, still goes to work every day and runs the office. I don't know about you, but I don't want to be doing that at 85. I love real estate, but I'd be rather be out on a boat in the middle of the Caribbean with Jeff, smoking a big fat cigar and drinking a glass of milk than running a brokerage. You know what I mean?
I just don't know that milk and cigars go too well.
Milk and cigars?
Yes.
If you dip them in the milk, they're a lot better. Like Oreo cookies. No, I'm kidding. Oh,
interesting.
Gosh.
But it's what you just said. I mean, and like when I first started, I'm trying to understand the competitive advantages of I'm talking to somebody in Oregon, and I asking them why they joined, and they joined because they only could sell in this particular neighborhood or this little piece of Oregon or Portland, I guess it was, and now they can sell on the other side of the city, and you're expanding it to 13 states. You can also expand it to 21 countries, right? So to build your business and not have that liability of the brokerage makes a lot of sense to a lot of people. And, as you know, we're going to be just driving this agent value proposition as hard as we can and make it better and better as time goes on.
Yeah, exactly. Jeff, I want to talk just for a minute because I get asked the question a lot, and it has to do with short sales. There's a pretty good short interest in our company. There was a while back before we did the split. That unwound, and it turned out to be the biggest rally in the stock's history. What I'm seeing is, and I'm thinking is that this is a very bullish indicator for our stock going forward. And I don't know if you're allowed to comment on that or not, but I'm just going to talk in generalities here. Typically, when you see companies with a lot of short, like GameStop is an example, but it also goes to show you how much somebody that writes a hack job on a company can move a market these days and get people to do things without even doing their research on the company. But just let's talk not about EXP, but in general, when you get a high short interest in a good company, how does that usually turn out?
I mean, it usually turns out bad for the short interest people, like so for the shorts. I mean, if the company does well, I mean, if you perform and continue to perform and continue to grow and do well. I mean, as you saw what happened the last time we went through that cycle. But we've been spending time on it. There's not a lot you can actually do about it other than perform. And that's kind of what we're focused on. I mean, we looked at different ways on, if there's something illegal going on, whatever. But we've dived pretty deep on it. But all we can do is perform. And we feel pretty good about that. And I think that, the message that I took back from talking to a lot of people, a lot of analysts, a lot of investors over the last couple, 2-3 months, is that they're really looking for the companies that are going to make it past what they think could be a really tough period of time. Right. And the feedback we're getting is that we are positioned to be that company. We believe that, right? So we just got to make sure we guide the company through whatever waves we hit going forward. And we're doing that. And at the same time, just like a good example was, Mike Valdez came to us when COVID hit and we're going to shut everything down. And he's like, let's go international. And at first I'm like, really? And then we looked at each other and go, yeah, maybe this is the time. And so there's a number of things we're doing in the company right now from an investment standpoint to really position us really well, as we get through this and get to the other side. And at the same time, the organic growth model is working really well. So, Cliff, we have looked at it. Eventually, if we perform, it will take care of itself. And that's kind of all we can do is control our controllables. And I think we are, with obviously your help and all our great agents out there and leaders.
I'm 1,000% on board with you. And, that's one thing that has really given me so much excitement about this company is that, no matter what the market is going to do, we're a model that's going to be profitable and successful. It's just like when you're in the real estate business, it's like owning a tollway and you collect the toll fees. And, if the cars slow down for a little while and you don't collect as many toll fees, you're still collecting toll fees. But if you have the ability to adjust and shift your model, and what I'm talking about is no fixed costs, then everything that we do, because it's a variable cost, it's going to fit perfectly with whatever the market's doing. And so I see, if we lost 200,000 or 300,000 agents, that would be great. But what I see is these agents who are going to be displaced from other brokerages are going to be seeking a brokerage that is the one that is going to be leading the pack out of here. And so for me, and I'm obviously fully invested myself into this effort, but I'm convinced that the beneficiary from these agents who are looking for a better place to do business are going to find us once they're willing to look under the hood and really examine the model and talk to somebody here instead of talking to a cab driver or somebody else for their advice. Then when they really see it, they won't be able to unsee it. So I feel very strongly about it. I can't believe this, but I just looked at the clock and we're like, I could go, Jeff, you and I could talk about this stuff for days on end. I'm so excited to have you here. We are going to have to kind of bring things to a close. Is there anything that you'd like to share with our audience that maybe we didn't get a chance to get to today?
Yeah, I mean, we basically, the company's very confident about going through a tough time. We've gone through it before. We're positioned properly. But at the same time, we are getting, our intention is to grow through it. And, I can't tell you how impressed I've been even more recently to see how strong our agent leaders are out there in all over the country and all over the world, actually. I mean, it's blown me away. I mean, back in the day, not too long ago, I'd see an event like you guys had this event last week, but there's so many of them, and we would know what they were, and Dave Canord or somebody would be there. We don't even know about half of them anymore. And that's exactly how the model's supposed to work, right? And that just, that should give people confidence from an organic growth standpoint that as this goes on, and the confidence that our agents and our leaders we feel very good about growing through this and getting into that. Glenn talks about the 500,000 agents in the 50 countries, and that's our goal, right? Could it take a little longer if things go off the rails? Possibly, but that's where we're headed.
Well, I am so excited about these affiliates that we've got. I had the privilege to spend some time with Glenn Stearns and Sean Patricus and George and their group. That excites the heck out of me. I was a lender, while I was an agent, and was heavily involved in the mortgage business. And I am just beside myself to see such quality people. And I say this a lot at the conferences. I'll say it now, and that is that Glenn has this incredible talent to be able to pick people and he's a people picker, right? C3 and develop relationships with people who are just world class, great core values, great fits for our company, as is Kind Lending, Stearns Lending, and now Success Lending, and with Jarek Robbins being over here and leading that effort. I mean, we really, anybody that's looking at this company that thinks it's just about real estate, again, hasn't taken the time to look under the hood and realize that all the stock that we own as agents is eXp World Holding stock. It's not just the real estate company. It involves the lending, title, eventually insurance, coaching. I mean, just the Success brand. What an iconic brand, 125-year-old brand that is just the Hall of Fame for thought leaders and success leaders in business. So it's super exciting. I joined Jeff back at the end of 2016. There were 2,500 agents here.
Right, exactly.
And Gene Frederick we had a shareholders meeting, and he said, now I want you to look around the room. And there was about, 120 people there, something like that. And he said, I want you to know, he said, look around, because this room will never be this small again. And the growth that we've experienced has been absolutely amazing. We're going to be excited to see you in Orlando.
Can't wait. And I want to thank you guys, because you guys are a great example of leadership that we have across the country, and couldn't do it. This is it. You guys are a great poster for who we are, and how we share, and and that's a big success for our growth too, is a collaboration across the entire business, and we all rise together.
Well, it is, and collaboration should be our middle name, because the level, and again, this is something, until you've actually taken the time to look at the difference, the collaboration that goes on with agents here is exponential. It is, if you're just getting your information out of your little zip code where your market center is, and that's how you're basing your real estate life, you're missing what's going on in the rest of the world. And we are a global company. Our offices are all in one place. It's called the cloud.
It's
Isn't it
amazing.
cool?
I love it.
Yeah.
I get excited about the technology piece.
It's really awesome. And
It's-
this iframe stuff that they're doing now is
I can't
super
wait.
cool. Yeah.
It's
And
like
then if you join, you get to go to events and dance with the Freeman family. Right?
yes.
Yeah.
That's huge. It's
Yeah.
huge.
Cut up a rug
That's
with
right.
the Freemans.
Yeah, exactly. You know, I was telling Glenn about the world is the only thing we have missing up there are restaurants and bars. You know, we got to figure out how to get those.
Well, you never know. I'll get to Alex and ask him. Get on it.
Yeah, exactly. Jeff, man, what a great time to catch you and get you on the show and talk about these really critical things that all agents are going to be looking at, considering as they look at their future. It is not, the sky is not falling. I tell people I sleep with sunglasses on because at
the future
EXP,
is so
I
bright.
keep thinking the sun's going to come up in the middle of the night. That's
Yeah.
how optimistic I am about things. I've been in this business 35 years. I worked on Wall Street for a while, and I, you know, at my young age of 63, I couldn't be happier or having more fun than to be working with folks like you and the leadership team at EXP. And I just want you to know that the next generation of me is equally as excited, and
Awesome.
we're going to be around a long time. So we've got some great things to do together, and let's get that started this weekend in Orlando. Can we do that?
We can, and I feel the same. So thank you very much. Appreciate
All right. And also, again, thanks Glenn Sanford for making this possible. Remember, if it wasn't for you, we wouldn't be here. And for our folks in our audience, if it wasn't for you guys, we'd have no reason to be sitting up here, because I sure don't go back and watch these things. Do you?
No, not really.
No. Okay.
Yeah.
All right, Trelvis, thank you, sir. Always love the new studio here. It's wonderful. Jeff Crilly, shout out to you, my friend. Got me on KRLD and Channel 13, Fox 13 in Tampa Bay yesterday. That was really exciting. And we will see you next week. We'll be back from Orlando
With a special guest
With-
from Success Lending, Chris Myers.
Chris Meyer, the former pro wrestler. That is going to be
This is
really
gonna be
exciting.
a
You
wicked
got to
show.
tune in for
Yeah.
that, right? That's coming up next week on
Cliff's Notes.
Folks, tune in to Cliff's Notes every Thursday at 1 o'clock Central for the tips, tricks, and tactics to explode your business